Greetings and salutations, everybody, and welcome back. This is the Northern Miner Podcast, and I am your host, Matthew Keevil, coming to you the week of September 5th. So fresh off the Labor Day long weekend, as we say, the last proverbial kick at the can for summer, kids going back to school and all that kind of fun stuff. I always remember those freaking back to school commercials when I was like in grade school, and you'd be like, no, the binder commercials, no. That's when you know the party is over. It is time to return to books. So as mentioned last week, Leslie remains on an awesome sounding vacation, kayak vacation in BC. So she'll be back next week. But once again, you have a nice intimate podcast with Matt. I also have actually a good guest this week too. So I have a little bit of fun coming up for us. But before we get to that, a little bit of a roundup of the show. Some of the bigger news last week we'll talk about. People probably heard about the PotashCorp-Agrium merger talks. Those broke. I think Bloomberg broke them midweek. It prompted a response from Brad Wall, the Premier of Saskatchewan, and surprised some analysts. So we'll do a little bit of a breakdown on what that could mean, what people are saying about a possible PotashCorp-Agrium merger. As we all know, fertilizer markets are brutal. I often say it's like mono and mono, which is worse, uranium right now or potash, or fertilizer. So we'll talk a little bit about that. I also had a chance to sit down with management from Wesdome Gold Mines, and they might have come across your ticker last week. A, their stock went a little bit buck wild, so it might have been on your highest gainers list. And B, they made a really interesting looking discovery at their Kiena complex, which they shut down in 2013 due to high costs, low gold prices. Same story we heard many times during that period. But now they've been doing some drilling there and cut some pretty interesting looking intercepts that we'll see. This could set the stage for a bit of a revival at the Kiena operation in Val-d'Or. So I had a chance to sit down and chat with Vice President Exploration George Maynard and newly named CEO Duncan Middlemiss, who people may remember from St. Andrew Goldfields, which was acquired by Kirkland Lake Gold earlier this year. So we'll dig into a little bit of the discovery at the Kiena complex by Wesdome Gold Mines. We'll talk about PotashCorp-Agrium a little bit, but first, without pausing too much, we'll run through our macro a little bit. But I do have a special guest who talks macro a little bit with me. So we talk about copper, gold markets, investment thesis, and stuff like that. So just quickly to run through this, gold did bounce back. We talked a little bit last week about how gold was kind of tailing off a little bit heading into late August, following the meeting in the Federal Reserve in Jackson Hole, Wyoming, when they said, we're looking at interest rate hikes as early as next month, which would be September. And then people were like, oh gosh, it's back on the table, and there's definitely going to be at least one by the end of the year. So obviously that tailed off gold. But leading into the end of the week, right into Labor Day, the U.S. jobs report came out and sort of disappointed everybody. So gold futures popped higher on Friday after the U.S. reported non-farm payrolls rose by 151,000 jobs in August, which sort of scaled back market expectations. And then obviously then people are like, well, they're going to do a rate hike. Does that eliminate the potential of a near-term rate hike, etc.? So I know a lot of people that say probably by December you will see one in the U.S. So that's sort of where the common thought process is right now. It seems unlikely we'll see one in the next 3 to 4 weeks, but you never know. So we'll pay attention to this. The Fed has been making a lot of hawkish comments on this. So we'll just run through metal prices really quick to ground ourselves, so we have some sort of our baseline for the weekly conversation. Gold closed the week at about $13.30 and 70 cents an ounce. Silver $19.61 per ounce, so relatively unchanged. Copper also relatively unchanged, $2.08 per pound, and West Texas Intermediate $45.17 per barrel. So relatively unchanged, largely, except for gold had a little bit of a bounce back late week. Without further ado, I had a chance to bring in friend of the program again, Mickey Fulp, the Mercenary Geologist. Mickey does a lot of cool stuff, works out of the U.S. About half the year. So he's recently, as we'll hear on the little interview we did here, returned back to his home base, which is Albuquerque, New Mexico. But Mickey Skyped in with us. We've got our new kind of Skype capabilities now, so we get some really good high quality audio from a distance. So now we can have people sort of call in from all over the place, and I'll have a chat with them, and we can do some really cool interview stuff. People really good feedback last week on the interviews with Clive Johnson from B2 Gold and Rob McLeod from IDM Mining. Those went over really well. So thank you again for all your feedback. Those are really fun to do, and we will be continuing to do that. So I'll be looking for more CEOs and management to talk to, maybe get some sound clips and stuff like that, and move towards video. But for now, let's chime right in here with Mickey Fulp, again, the Mercenary Geologist. I'll run this audio. We have about a 15-minute chat just about macro conditions, what his views are in terms of copper, gold, etc., and what he's looking at in terms of investments right now. Like, he writes an investment newsletter, so when he's making recommendations, I sort of ask him, well, what are you recommending right now? So there's some interesting questions here, and we kind of go back and forth a little bit. It's a good conversation. So I'll run that now, and I will see you guys on the other side. We are lucky again this week. I am joined by the friend of the program, Mickey Fulp, the Mercenary Geologist, who's joining us today, actually, not abroad. I guess you're home, right, Mickey?
Yes, I'm at the farm south of Albuquerque, New Mexico.
Well, Mickey, you know what? I want to start with you. Just we've seen that volatility in gold in the last week because of the Federal Reserve comments in Jackson Hole, Wyoming. We had the U.S. jobs report today, which was actually a little bit disappointing, I gathered, compared to expectation. But I just wanted to get a little bit of a sense from you on gold. We're at about $1,326 an ounce today. I think it was as low as about $1,300 almost a couple days ago. So maybe a little insight on where you see bullion and what's sort of going on down in the U.S. with the economy and the Federal Open Market Committee there.
Yeah, well, I think your take is correct in the fact that over the last month or so, we've seen some weakness in gold, but it's bounced up and down. It's very much range bound. I think it actually hit 1305 intraday within the last week. It's rallied over essentially this morning. It was stronger yesterday. It's over the last couple of weeks, its range closes from 1309 to 1352, and it got knocked down on speculation about the rise in interest rates, which personally I don't think is going to happen until after the election, and then it rallied today on a less than lustery U.S. jobs data report, or less than expected. Where it goes in the future, I'm not really sure. It looks pretty happy being range bound here. I'm looking at my weekly board, and since basically mid-September, it's been range bound in that 1300 to 1365 range. Seem to be able to get out of that.
Yeah, no, exactly. And it's interesting. I mean, I saw, the opinions on this interest rate thing are all over the place. I mean, I saw Bill Gross, who people might know from Pacific Investment, come out in Bloomberg today and say, "Oh, I'm pretty sure there's going to be an interest rate in October or November now." And then you have people say, "Oh, there's a 57% chance." I love those percentages analysts put out, like a percentage chance on an interest rate hike. It's like, what is that based on? But they said by December. So I think it's interesting that you say you don't think it's going to come through at least until the election, right? Which is...
Yeah, I don't, Yellen wants to keep her job. So she's not going to do anything. I think the federal policy right now is trying to maintain the status quo through the election. I've kind of gone on record in the recent past saying I don't think there's going to be an interest rate rise. Well, let's assume that it wouldn't happen until after the election. Do you think they're going to do one in the middle of December and at the end of shopping season? I doubt it. Then we have a newly elected president in waiting in mid-January, so it would be my opinion that we won't see a rise before February. But if we do, it's a 0.25% rise. Raise it, and that doesn't mean anything.
It could affect your gold stocks, though.
Oh, absolutely, and that's where I was kind of heading here. So we also track the Toronto Venture Exchange on a weekly basis, and it's been quite interesting over the last couple of months. We had I'm looking at the board right now, from July 1 until basically last week, we had one, two, three, four, an 8 week run of 52-week highs. Now, that does not directly correlate with gold stocks, but the venture exchange is really driven by gold. And it's backed off over the last couple of weeks. Well, lo and behold, what is that back off correlated with? It's the price of gold. Gold's been off the last couple of weeks for the most part. So that when we look at gold stocks going forward, we're in the summer doldrums. This week, last week, the week before have been very low volatility, low volumes in the markets, even the major markets, although they've been setting yearly highs, they're a point or two. So, what's going to happen next week when everybody comes back to work? I don't have a strong prediction, but I've been hoping for a correction in the Toronto Venture Exchange because I think the gold stocks have been very much overbought. What we had over the last couple of weeks is a 7% decline in the Venture Exchange Index, and that does really not constitute a correction. And it correlates exactly with the price of gold if you go in and look. So
Oh yeah, he's got that chart. Yeah, I can imagine. Yeah. So Mickey, I mean, you mentioned it a little bit. I mean, when you look at value opportunity, I mean, this is we were here with Mickey Fulp, the Mercenary Geologist, has a great newsletter. I recommend everyone check out. But when you're making recommendations these days, what are you sort of telling people who read your newsletter and who look to you for advice on what they should be doing in terms of, let's say, precious metals?
well, I'll tell you what I'm doing. I'm proceeding cautiously. Gold stocks, uh, with the exception of the startups and a few relatively unknown or unloved or unwanted, what I consider good stories, valuations are too high to me right now. Okay. So, from that point of view, I think you need to tread cautiously. There are opportunities. I think the opportunities that present themselves at the present time are the trickle down effect to some perhaps lower level or less advanced juniors. And but Matt, I have to say that presumes that the bull market in commodities or the bull market in commodities led by gold and the venture exchange following on to the back of that. Uh, this presumes this is going to continue, and I really think it's going to be driven by the price of gold. And I don't have a strong opinion or feeling what price of gold's going to do. So tread cautiously, um, be a contrarian, pick things that are unknown, unloved, unwanted, and undervalued, and realize that this is a risky business. One of the indications that the market has changed significantly is that good drill results are being rewarded now. And we haven't really seen that for 2 or 3 years where, and there are some good projects out there. And so that's probably would be my general sweet spot in the market right now.
And then Mickey, the other thing I wanted to kind of sort of dig into is I remember we sat down at the Yukon Investment Conference. This was back in mid-July, and one of the things you mentioned was it might have been a time to start looking at copper. And you said you were sort of looking at maybe some undervalued copper plays. I mean, copper was well, it's been in the same as gold, same bracket for maybe 6 months or something, right? Between about 205 and 220 a pound. And so I was wondering, there's been a lot of macro information coming out on copper recently that indicates there might be more of an oversupply condition than people previously thought. So I'm just wondering if your investment thesis on copper as a macro commodity has changed at all.
Generally, Matt, my views of copper do not change uh, in on short-term time basis. Now, my predictions of copper price can change in the short term, but the thesis I operate under and have for quite some time is uh, the consumption of copper grows annually 3 to 4% a year, and it has since 1900. Demand continues to increase. There's 85 million more people on the planet every year, and 25% of the world still goes to bed in the dark and gets up when it gets light in the morning and need copper to transmit electricity. So, from that point of view, I remain a mid to long term bull on copper. The thing about being a contrarian, as you well know, is you have to have patience. So, it would be something on the order of looking at gold when it hit its bottom uh, of whatever it was, 1050 or something, and wondering when that was going to turn. Now, we were all surprised how quickly it turned. I don't think copper's going to turn that quickly, but the fact remains the world needs copper, and we're not finding enough copper deposits that are developable and with good economics. So, from that point of view, not really, hasn't really changed.
So you're still sort of on the lookout for some nice sort of long term hold copper assets if you can find them.
Oh, absolutely. And if you look at some things the smart money is doing on the Toronto Venture Exchange, there's a couple of copper accumulators out there that are picking up good copper projects, and I think that is an indication of some of the longer term views on copper. There's a lot of misinformation, even amongst analysts and people that follow the copper market as to supply demand. It's probably one of the most transparent commodities, but that said, there's a veil of opaqueness that still kind of permeates the entire commodity space. Commodity space.
And the narrative too, right? How people sort of what you read. Like I mentioned at the onset, I've a few analysts and some of the, let's say, Bloomberg articles and things have portrayed this super oversupply of copper that's coming up, where it could go. I know some, let's not call them crazy people, but let's some outliers who think copper could go to $1.50 a pound, which is just seems ridiculous to me. But yeah.
Well, it does to me too. I mean, when it went to a buck 96 a pound, and I'm pretty sure that was on January 20th of this year. I immediately called bottom. I immediately called bottom of WTI West Texas Intermediate crude at 26 and 26.67 or whatever. You see these outliers on prices, and you say, well, the cost of production worldwide will not sustain that price very long because it's going to result in supply disruption. And the thing about both copper and oil is the world continues. We may have surpluses right now, but demand continues to be strong worldwide. And it's just a matter of time before demand catches up with supply.
Just to wrap up here, Mickey, I don't want to keep you too long. I know it's Labor Day weekend. We're all ready to get out of the office here, right? So I just wanted to one of the other things I wanted to touch on that you'd mentioned previously with one of our sit downs. I think it was at the Yukon Investment Conference again. Was that one of and you sort of touched on it earlier? Was one of the things you really like is sort of looking at shells and like earlier stage investments as far as this stage of the market. And I'm wondering, when you're out there, obviously not mentioning anything specific, but trend wise, are you seeing more stuff start out from, let's say, the qualifying transaction stage at this time? Have you seen more deal flow kind of moving into September here? Or?
Personally, I have not.
Oh.
Personally, I have not seen any more. I know of some stuff pending that I think perhaps will attract market attention. But to tell you the truth, Matt, I am at this stage having a relatively hard time of finding good stories that I consider to be unknown, unloved, undervalued, et cetera. So that's probably one of the reasons I've migrated toward startups. And the thing with startups, you want to associate yourself with the right people. So, who have the ability and the right share structure and the ability to raise money for the proper or for acquisitions that will attract the attention of the market. One thing I think, and I'll use an analogy with, say, 2002 to early 2002 to mid 2003, and even into 2004. There were a lot of majors that were shedding project that they considered it not to be core assets. So if past is prologue, then that might be a spot you want to look at, or companies that are going to acquire projects that the majors shed.
Well, Mickey, I would like to thank you again for joining us. This has been Mickey Fulp, the Mercenary Geologist, a ongoing friend of the Northern Miner podcast. So thanks again, Mickey, for joining us from Albuquerque, New Mexico.
Well, I consider myself lucky to have this working relationship with a northern miner, Matt, and I'm always available. And I find talking to you in the public venue to be at least refreshing, and it makes me think. So that's always
Yeah,
good.
always good. And Mickey, have a great Labor Day weekend, and we'll talk to you soon.
All right, thanks a lot, Matt.
And welcome back. So yeah, it's always fun to talk to Mickey, and beneficial. Being from the U.S., he has good insights on the job market down there, sort of what the Fed's doing, some of the interest rate and election stuff. It's always cool to get some insight from somebody who lives in the country. So yeah, gold does appear to be range bound, and we were popping back up heading into September here. Was low, like we said during the interview there. It hit near 1,300. Then later in the week rallied towards 1,330, and we're looking like we're going upwards heading into this week. But again, we'll watch that range bound that Mickey mentioned of upwards of our 1,350. So we'll keep our eyes on that. Should be interesting for us gold investors out there. So we'll keep our eyes on that. Now, the other thing I wanted to quickly dig into here was the PotashCorp-Agrium merger talk, which broke. I think Bloomberg broke this early last week, maybe Tuesday. This sort of caused a few waves, given that these are two very large Canadian-based companies. Obviously, PotashCorp is based in Saskatoon, while Agrium is based in Calgary. So this broke, prompted a response from, Saskatchewan Premier Brad Wall, who just said they'd be monitoring, obviously, the tax situation and the interests of Saskatchewan. One of the things that did come up, obviously, is people will recall back in, I think it was late 2010, the Canadian government did nix or reject essentially BHP Billiton's large-scale attempted takeover of PotashCorp, and that was under the Investment Act of Canada after Tony Clement, then the Canadian Minister of Industry, determined it was not in the net benefit of Canada. So interestingly enough, there has been some buzz about, obviously these PotashCorp-Agrium talks are very early stage, but there's been some discussion on regulations and how it will work into competition and things like that. Given these are two Canadian companies, some of the analyst reports I've read have speculated it won't be quite as much of an issue as the BHP takeover was. So it'll be interesting to follow this along. Obviously, this was somebody broke this, and then both Agrium and PotashCorp had to come out and say, yeah, we've sat down a little bit. And then I have some interesting analysts' observations on it. Raymond James analyst Steve Hansen was a little perplexed by the proposed marriage, as he put it, though he did cite ripe cost synergies where the companies combined could save about $500 million annually, and also noted that PotashCorp's obviously been looking at large-scale M&A for a little while now. People will remember last year they attempted to take over Germany's KNS, another large fertilizer player, and they also took a 9.5% stake in Brazil's Heringer last year. So PotashCorp's been on the lookout, but Steve Hansen from Raymond James also noted he wouldn't be surprised if Agrium kickstarted these talks. they are a largely retail centric, whereas PotashCorp's more on the production and mining side. So there could be some interesting synergies there. And then Scotiabank senior fertilizers analyst Ben Isaacson said he thinks maybe this deal was leaked to gouge market opinion on whether this could actually fly. So maybe get some feedback from shareholders on either side, etc. And he also said he wouldn't be surprised if Agrium initiated negotiations. He did note that this could eventually be viewed as a quote-unquote brilliant bottom-of-the-cycle move by Agrium to secure out-of-favor assets, trading at roughly 30% below replacement cost. So an interesting one. This is big news for Canada, obviously. These are two major Canadian companies. Combined market capitalization approaching near 40 billion Canadian. So interesting stuff. We'll keep our eyes on that. Obviously, very early days. But we just wanted to touch base on that because that's been sort of buzzing around on the newswire. So an interesting one. That's some potentially large-scale M&A, as we noted, or as I note on a fairly regular basis. Fertilizer markets are relatively terrible. We always say it's mono a mono, which is worse right now, uranium or spot potash. Because right now, if you look at PotashCorp's well, it was our second quarters. They reported an average realized potash price of $154 per ton. Now, just to put that into perspective, that's a 44% year-on-year drop. During the second quarter of 2015, they reported realized prices of about US $273 per ton of potash. So a steep drop there. So it's tough times, but an interesting could be an interesting merger of relative equals there on a market capital basis. So something to keep your eyes on moving forward. And a quick shout out to our loyal sponsor, the Yukon Mining Alliance. Thank you so much for coming on the Northern podcast journey with us. Always a lot of exciting stuff going on in the Yukon. Please do check it out. Surf over to the Yukon Mining Alliance website. You can check out a number of promising looking companies. A lot of nice looking gold plays up there right now. So we all recall the Goldcorp deal for Kaminak. A lot of interesting drill programs actually going on up there right now. You can check out Independence Gold, which Goldcorp took a little bit of a slice in earlier this year due to its contiguous property to the Coffee Project. Also, another nice little snippet of news out of the Yukon. Victoria Gold recently completed a $28.7, so nearly $30 million bought deal financing. So Victoria Gold has the Dublin Gulch project outside of Mayo, which hosts the Eagle deposit, which is pretty much shovel ready. They have all their permits. They've been on a bit of a fundraising run this year. In late April, they announced a $24 million strategic investment by Electrum Strategic Opportunities and Sun Valley Gold. They've now raised another nearly $30 million. So it'll be interesting to see where they're going to go with the bulk of the project financing. I know that's something I've spoken with President and CEO John McConnell about fairly regularly, so it's looking quite positive for Victoria. That deal was, I believe, oversubscribed as well, so looking pretty good there, so we'll pay attention to them as they move forward. They're definitely not lacking in capital at this point in time, so we'll see what's happening up there with Victoria. Always a nice looking company. Probably one of the more near-term production targets for the Yukon as well, alongside, obviously, Coffee now with Goldcorp's involvement. So it's going to be interesting up there. So do please take a look at the Yukon, and thank you again to our loyal sponsor, the Yukon Mining Alliance. And just to wrap up here this week, I wanted to quickly touch on Wesdome Gold Mines, which has been, if anyone's caught the market tables recently, Wesdome was one of the major gainers. You probably saw both on volume and percentage and raw value add. They went on a big run after announcing some new results from the Kiena Gold Complex in Val-d'Or, Quebec, I think around August 24th. Now, this is a mine that, as I mentioned earlier, has been shuttered since 2013. An underground mine due to just general cost pressures, falling gold prices, obviously lower grades, etc. It was sort of it was a long-standing operation. It ran since 1981 and produced about just over 1.7 million ounces gold at about an average grade of 4.5 grams. So it's fully permitted site. So it's got a 900 meter production shaft and 2,000 ton per day capacity mill. So that obviously makes any sort of discovery more exciting because the critical mass needed to restart this thing isn't quite as high due to the fact that a lot of the infrastructure, both surface surface and underground is already on site. So anything they find there, the increments necessary to get this thing back in production are obviously lower. So what they did, I had, as mentioned, had a chance to sit down and talk with Vice President Exploration George Maynard and with new CEO Duncan Middlemiss. And what they had done is George, the VPX there, he said straight up, he says, I'd say this property is one of the best brownfield gold exploration assets on the planet. So what they've been doing is the bulk of the historic production came from something called the S50 zone. So they're looking for analogs of the S50 zone. And basically they were just looking, they'd been chasing a long structure, but they turned the drills around, apparently, according to George, and hit something pretty impressive looking. So what they did was 2 drills were testing for, as mentioned, a repetition of the S50 zone along a Z-fold interpretation, 200 meters to 300 meters below existing mine infrastructure at a depth of around 1,200 meters. So the company, Wesdome, has identified at least 2 quartz veins and quartz vein breccia systems near altered and deformed comatite theoletic basalt contacts. Oh my gosh. That was a mouthful. And these results, the thing that stands out here is the grade, clearly. And it's significantly above historic head grade averages, which is a big, when I was talking to Duncan and them, they made a big point. This is like, they never expected the grade like this is just wild. George actually said, George Maynard, the VPX, he's like, I was on vacation and it's just driving me nuts. I need to get back in the office. But so what the results they released were 17.4 meters of 94.35 grams gold from 491 meters depth. And then also 14.25 meters of 223 grams gold from 690 meters depth, and 8.2 meters of 8.43 grams gold, so a bit lower. And still not low, like but it's not that freaking bonanza like 200 gram per ton intercept like drove the stock a little bit bonkers. So obviously everybody was pretty excited, and they said, well, Duncan, the CEO, was like, oh, this is definitely jumped up in our priority ranks now. They'll look to give maybe a little bit more resources towards exploring Kiena now that they've found what they hope has tonnage as well. So more of an analog to that S50, except higher grade, right? It would be absolutely ideal. So the company was up, like, following the results, like over 70%. So they gained well over $1. They're trading at about $2.75 per share at press time. So a big surge. It's nice to see, as Mickey said during his segment earlier, that success with the drill bit is now being significantly rewarded on markets. So that's always nice to see. We hope that continues heading into fall. Here is a lot. We're expecting quite a few results from a variety of drill programs across Canada and internationally. So it'll be nice to see some of these companies and management teams getting rewarded for their efforts now that the market's changed. Well, in terms of gold, anyway. I can't say anything for for base metals outside of zinc. But no, it's nice to see. So take a look at the Wesdome story. Obviously, it's the valuation's getting up there, so they've definitely been rewarded for this intercept, as they should be, because that's some darn impressive grade. And so take a look, and new management just coming in there, so interesting to see what Duncan and his team gets up to there. There had been a little buzz around Wesdome prior to this happening, because their valuation obviously went crazy, but about potential M&A, maybe they were going to get taken out, etc. The company currently operates a production center in the Wawa camp in Ontario. So it's small operations currently. The Eagle River and Mishi mines. It's sort of in central Ontario. They produced around 12,000 ounces during the second quarter at all-in sustaining costs on a production basis of around $1,300 per ounce. So this could be a big game changer for Wesdome. New management coming in could be exciting. So please do take a look at the company. That just came across my desk, and also I'm sure anyone who follows the market table saw their stock go through the roof there early last week. So interesting to see. That pretty much wraps up our episode for this week. We do thank you again for joining us at the Northern Miner Podcast. We do appreciate it. And hope you had a great Labor Day long weekend, and we're easing here into September. So this has been Matt Keevil at the Northern Miner, and I'll talk to you soon.